Hey guys, and welcome to the Working Money Channel. I've got Crypto Insight UK here on Twitter posting this, okay? The DXY is approaching key support. Do we continue to the downside, or will the 2017 high hold? This is where it gets interesting, okay? When we lost the high in 2017, we saw the biggest ever percentage gain in altcoin history. Now, as you guys know, the DXY is the relative strength index for the US dollar. And back in September, late September of this year, we did actually see its high. Since then, it has been coming back down. So other currencies against the US dollar have been gaining momentum, have been gaining traction. The other day, I demonstrated that while looking at examples like the euro. So, euro to USD, we can see we have seen a rebound since late September. The Great British Pound is another one. GBP to USD, we have seen that increase in value for that particular fiat currency as well. But the thing Crypto Insight is noticing here are those highs and then the distinct collapse coming back down into a level of support. And the times that we saw that actually coincide with altcoin all-time highs. So let me just bring up the DXY one more time here. And as you guys can see, it did reach this level of resistance here back in January of 2017. But then when we came back down here, okay, early 2018, so January 2018, it came back down here and found support back down in here. And at that point in time, okay, again, this was early January 2018. If we coincide that with the total 2 market cap, which is all altcoins, so basically the entire cryptocurrency market minus Bitcoin, we saw that trend. We saw altcoins really max out in and around here. So it started in late January and went throughout till about mid-January. So could we see the same thing? And are we seeing the same kind of thing occurring on the charts today? Again, we bring up the DXY and it has been falling. So we haven't seen those same lows that we saw back in early 2018, but this could possibly mean a move for altcoins to the upside. Just taking a look at XRP real quickly here. XRP is trading at 38.7. So not too much movement for XRP right now. Just, basically trading on low volume. We haven't really seen anything big for Bitcoin either. Bitcoin's trading just under $17,000 per coin. And again, over the last few days for Bitcoin, we have basically seen that same kind of trend just kind of play out here. I mean, on the daily, it is looking like it could be forming a mini bullish pennant here, but we're not really seeing a lot of volume. Maybe the volume will pick up and maybe we will see Bitcoin take off once again. Michael Branch posted this. So John Reed Stark coming out and criticizing Tether, all right? Former SEC official slams Tether for running a Ponzi scheme, labels the firm a house of cards. Oh, you don't say. I mean, we've been talking about this for years now in the crypto space. The fact that Tether could be the next to fall, and John Reed Stark is also saying the same. Former Security Exchange Commission enforcement official John Reed has questioned the implication of the alleged lack of transparency by the USDT stablecoin provider Tether. According to Reed, who worked at the SEC for almost 2 decades, Tether's failure to disclose key information about its balance sheet might be a sign the firm is operating a house of cards, Reed said in a tweet. And so here's his tweet down here. Well, tell us Tether is running a Ponzi scheme without telling us Tether is running a Ponzi scheme. Just listen to the answers here. In my opinion, as a former SEC enforcement official of 18 years, the evasion, deflection, lack of responsiveness makes me believe Tether is a house of cards. And so I've got the Squawk Box interview up here. I don't know if you guys have seen this yet. Listen to this.
So let me ask you, as it relates to Tether, about the trust issues, if you will, because I think there's skepticism, there's questions, and I think the questions that have sort of come from the fallout of FTX have now been put onto Tether, though, frankly, there have been questions about Tether for some time. I want to just read you 2 sentences. This is from the Wall Street Journal. You've seen the story. Tether, which is incorporated, as you know, in the British Virgin Islands, doesn't publish audited financial statements or complete balance sheet, leaving outsiders with an incomplete picture of the company's health. And there's a gentleman, Peter Crane. Peter is the president of Crane Data. He says, I've been skeptical and in disbelief that they, that is you, can get away with the lack of disclosure and with limited transparency. If you do have reserves, why don't you show them? And so I'll ask you the question, why don't you?
Well, what I can say is in the last 8 years of Tether's operating history, they've always redeemed every token for exactly $1. I sold the company in the end of 2015, and the principals have continued to operate that with, in my opinion, to the absolute best of their ability and with the best risk mitigation tactics in the industry. It has withstood the test of time.
So why do you think that then the questions persist as they do about what's really going on and what really is backing these stablecoins?
Well, Tether does offer on its website proof of its reserves, or actually audits. Every few months they post different audits on where all that cash is currently how it's being invested. Right now, people still question it, and these questions are okay. And the industry as a whole is going to become more and more transparent due to these recent failures of FTX and BlockFi and these other companies. And so that is really good for the industry moving forward.
So, yeah, I mean, the deflection is fairly obvious there. We didn't really get any kind of responses to the actual questions that was being asked by Andrew Sorkin here from Squawk Box. Anyway, it does make you wonder. Tether has always been on the crypto community's radar. There are a lot of skeptics in the space. Anyway, just another opinion here from John Reed Stark. Wanted to thank Michael Branch for posting that. I also saw this, guys, with regards to the Vechain project, okay, this from Cryptic Poet here on Twitter. Walmart China usage of Vechain exploded in November. We always knew Vechain was a partner of Walmart China, but apparently the usage for the blockchain did explode last month. The implosion of blockchain technology adoption among mainstream traditional companies has increased following Walmart China's partnership with the blockchain-built supply chain management platform Vechain, and as a result, the China arm of the US-based retail outlet has recorded high usage of Vechain compared to other platforms. So guys, they are using Vechain in a real-world use case as the global beer flu impact on various companies' operations continued to be felt. Firms sought solutions amid the rising challenges to scale, and then that's when we saw Walmart China's partnership with the Vechain blockchain platform, providing it real-time use case and broader adoption. With its cross-border logistics and trade solution for multinational corporations, the Vet public blockchain has improved the engagement in Walmart China's operation, and November has seen the most active month for the retail giant's operations using Vechain. So guys, Vechain really hitting it out of the park in China specifically. Hopefully we start to see more partnerships form, and I think it was a few months ago now, I think it was, if my memory serves me correctly, we did recently hear of the Vechain project, or at least murmurings that they were going to start to move into Europe and provide supply chain management solutions for some companies in Europe. So, they're a Chinese company originated in China, obviously have the partnerships in China right now. And I mean, these are no small partnerships either. I think some of the other ones include McDonald's and BMW, if I'm not mistaken. So, for supply chain management, a lot of these large corporations, they obviously have a need for that, and Vechain provides that solution. So some interesting news there. Wanted to thank Cryptic Poet for posting that. Guys, I also saw this. This is from Ripple partner Flutterwave. These guys are based in Africa, and, we're seeing Africa grow by leaps and bounds. Well, Flutterwave has now collaborated with CBIH, or CEBIH, on 2022 conference to secure the payments ecosystem in Nigeria. Flutterwave, Africa's leading payment technology company, partners with the Committee of E-Business Industry Heads to host the annual conference, or the CEBIH 2022, towards growing and securing the payments ecosystem in Nigeria. The conference, which was held in Lagos on December the 2nd, promises to chart the course for combating fraud and payments. This collaboration shows a renewed commitment by Flutterwave to support conversations and create a safe and secure digital payment ecosystem for all Nigerians. So Flutterwave is just another one of those companies. They have provided that better payment solution through using RippleNet technology. I believe they did start in Nigeria, but since then they have started permeating other countries in Africa as well, creating better payment solutions. And now they have a competitor in Africa. I remember, who was it? Can't think of the name right now, but there is now another company that does leverage RippleNet that was based in Africa that has come into that market. So Flutterwave, not the only game in town. However, they are still working to collaborate with other businesses and organizations to continue to grow the industry. So we're seeing this now. E-payments and e-businesses are a main focus. Commenting on the choice of the theme, Celestina Appeal, the chairman of CBIH, said solving the payment challenges and fraud risks in emerging markets like Nigeria requires collaborative efforts and strategic partnerships. She stated that the focus of this year's conference is very apt, considering the menace of the increase in volume and value of fraud incidents, which undermines our collective efforts as an industry. So particularly with fraud, obviously they are looking for better solutions for payments, and the blockchain is a perfect solution for that, utilizing DLT technology, obviously through companies like Flutterwave, who are Ripple enabled. So great news here coming from the Flutterwave camp out of Africa. I also saw this, guys, another one from Michael Branch. We are still seeing lots of XRP moving over the XRPL, okay? Whales kicking over 150 million XRP. The aforementioned transfer carried about $56.5 million worth of a Ripple-affiliated cryptocurrency XRP. Details provided by XRP-focused wallet tracker BitHomp shows that a whale moved the staggering amount of XRP from a Binance wallet to the major US exchange BITRUE. Recently, whales have become quite active, moving massive amounts of XRP from one anonymous wallet to another, or sending big lumps of this token to exchanges to sell or to withdraw it to a cold wallet storage solution. So lots of XRP still on the move. The other day I was talking about how XRP's social dominance has also risen alongside XLM and the status SNT coin. So we are seeing that as well. Interesting news there. Wanted to thank Michael Branch for posting that. And the SEC, guys, they have also now issued their reply. I just did a video yesterday regarding Ripple's reply to the motion for summary judgment. Guys, I will link that video up here in the top right-hand corner if you didn't catch Ripple's response to everything. Well, the SEC, guys, we got more information on how they replied as well. Wrath of Kahneman here, giving us some of the highlights. Ripple says that if the SEC claims common enterprise, that means participation in the entire XRP market, then it would need to show Ripple manages, controls, and operates the entire market, which is not true. I'm no lawyer, but this sounds difficult to prove. So this is one of the key points here that is in the SEC's brief that they are going to find a hard time to prove. If the SEC wants to take the unsupportable position after reply briefs that have been filed, that the supposed common enterprise here is the entire XRP market, then it would have to show, guys, under Howey, that defendants managed, controlled, and operated the entire XRP market. And as we know, that is just not the case. Through obvious examples, we know that XRP is utilized in the ecosystem through many different use cases, and many different companies build on the XRPL. So many different companies have XRP, they possess XRP, and they do with it as they please, building on the XRPL in an independent fashion from Ripple. So it cannot, and the theory would also fail for the other reasons described above in the defendant's motion. So this is one of the bigger points here. JV, though, had a few comments with regards to this. Ripple created the secondary market with market makers, he argues. Ripple distributes XRP from their escrow on monthly releases. Ripple buys back the XRP to ensure sales from their ODL partners don't have significant impacts on the market. This is what automatically comes to mind. Wrath of Kahneman here responds in context to the reply cited. Ripple claims common enterprise requires a level of promoter control the SEC has not demonstrated in fact, nor is possible given a fungible asset available on the secondary market correlated to other assets where no obligation exists with purchasers. And JV responds here, of course, Ripple's lawyers claim that. That's what they're getting paid for. But then you need to compare it to what the SEC claims and what have been ruled on in other cases. It's not just about what Ripple claims. Wrath of Kahneman responds again. You may want to read the brief. It isn't exactly a he said, she said argument. The problem Ripple cites is that the SEC has not said anything about this. So what exactly are you suggesting it should be compared to? The entire SEC MSJ? I made no claims about the case as a whole. JV responds, I know it isn't, but you specifically said Ripple claims, and I was mainly responding to that. Compare Ripple's claims to the SEC's claims and actual court rulings. Some other members of the XRP community also jumping in on this, like Flex at Flex2069 here on Twitter. Jay, surely unless the SEC makes a counterclaim on this exact point, Ripple claiming this stands as fact, that's the whole point of the legal argument, right? Mikkel XRP also responding here, the SEC has yet to put together a comprehensive brief, let alone clear the burden of proof. There are so many flaws with the SEC's argument, I think at this point, it's really just going to be up to the judge to decide based on what the judge has heard thus far. And I have a feeling that, you know, regardless of what really is in these briefs, I mean, this lawsuit's been going on for so long now. It's been going on for almost 2 years. It's almost 2 years now. It was announced in late December 2020, and we're already in December 2022. I have a feeling that, Wrath of Kahneman does have a point here with regards to, proving this. However, JV did post this. Okay, the SEC explains why XRP can't be compared to precious metals, diamonds, oranges, and oil in their final reply brief. So, this has been part of the argument with regards to the Howey test. The orange groves versus the oranges has been a famous example that we've been hearing over the last 2 years. For these reasons, Ripple understandably never treated XRP like oranges in a supermarket. So this is the SEC's argument, okay? Ripple published quarterly market reports that mimic stock analysis reports with information about XRP's price, trading volume, and sales activity, and of Ripple's XRP-related efforts, e.g. SEC, and then they give an example here. In this respect, Ripple is quite comparable to Exxon, which publishes periodic reports under the securities laws, not for those who buy Exxon gas for their cars, but for the benefit of those who invest in Exxon's business endeavors. Also, quite unlike the seller of grocery items, Ripple took care to stop selling XRP to lower the footprint of the sales on its price, placed its XRP in escrow, and even bought back XRP it was selling, and then touted all these steps, including stating it may continue to undertake purchases of XRP in the future in order to support healthy markets. And that is all true. That is all things that Ripple did say. Grocers, however, who did not invent, or I think that might be invest in their items or control most of their supply at inception. No, that is invent. Okay, so I guess they're stating here that Ripple did in fact create XRP, which is technically not true. Are not in the business of buying back their products and do not put their goods in escrow to give comfort to the market about their price. As all of this shows, XRP is not reducible to items like diamonds, oranges, rare earth metals, or gasoline, focusing only on XRP as just computer code and ignoring how it was sold. This myopic approach may offer superficial similitudes to the sale of a good for consumption. So that's what the SEC is stating here. And JV, if you guys don't know, he is part of the XRP community. He's an XRP enthusiast. He's just trying to, I guess play devil's advocate here. This is not FUD, sharing legal documents for your own consumption to make what you want of it. And he shares a few more documents highlighting certain points here, which I will link in the description of the video if you guys want to read further. Rob W. here, though, responding, the harder the SEC tries to distinguish XRP from other commodities, the more XRP looks like a commodity, ironically. Most commodities have little to no value until they are discovered or created and put to use. And of course, the one holding all or most or a lot will be its biggest champion. JV responds, most commodities are continuously worked for by anyone that has the resources to obtain them. Name one commodity that was created by an entity, and that entity started out with 100%, then distributed some for profits and retained half the supply. Let's click on the responses here. I hear what you're saying. Just as how we speak to that is the real question. Example, company builds train tracks, then builds the only trains for those tracks, then sells a half of those trains. Is the company stock the security, or are the trains? XRPL are the tracks and XRP are the trains. It's now becoming a philosophical argument, and I mean, I guess you can look at this in many different ways. Bill Morgan here also, posting his thoughts on this. It's not only about Ripple's sales. The SEC states in its summary judgment motion that all sales of XRP are investment contracts, which is consistent with the assertion there has been a continuous offering of XRP for 8 years, and its assertion in the amended complaint that investors who purchase XRP from Ripple are in a common enterprise with other purchasers of XRP, which did not purchase XRP from Ripple. See below. The offering is defined as the Ripple offers and sales, but those buyers from Ripple are asserted as being in an enterprise with common buyers. And so here's what he stated here. Purchasers of XRP invested into a common enterprise as per the SEC. Investors who purchased XRP in the offering invested into a common enterprise with other XRP purchasers as well as with Ripple. Guys, now it's going to be up to the judge. Luckily for us, though, we know what we hold. We've been following, or many of us have been following this case since the beginning. And Tony Edwards just recently interviewed Roger Ver. He is a Bitcoin evangelist. And he was also the creator of Bitcoin Cash. The good thing about Roger, though, is that he is a proponent of the entire crypto community. And luckily for us, here's his thoughts on the Ripple SEC lawsuit.
Tough question for you. Do you think Ripple is going to win this?
Yeah, I think Ripple will win. But if I can add to that, they'll win at the expense of maybe tens of millions of dollars, maybe $100 million plus spent on this. That's all money that they could have used to pay software engineers to build better tools to build on Ripple, or better user interfaces, or better wallets, or better user integrations with all these different things. So that's maybe $100 million of fees that went to not make the world a better place. And the world is that much less wealthy than it otherwise would have been. The world is poorer than it otherwise would have been. Fewer people have food to eat. More babies die at childbirth. Like, the Bitcoin maximalists love to make fun of me for saying that. But if you look at the countries with the highest rate of GDP, more babies survive childbirth, right? So if you want more babies to survive childbirth, you want more economic freedom that leads to more economic growth, and more economic growth leads to more babies surviving childbirth. And the way to do that is not having to spend hundreds of millions of dollars fighting the SEC with stupid lawsuits. And so I really would like to see a lot of that sort of thing come to an end.
So there you have it, guys, from Roger Ver, courtesy of Thinking Crypto, the Thinking Crypto podcast that is put on by Tony Edward. I do suggest you watch the full thing. The link will be in the description of my video here. So he's been following and he seems to think Ripple is going to win this case. He does have criticisms of where that money, could have been going. And I don't disagree. Ripple could have been putting that money towards something way better than fighting the SEC. Alas, here's where we are, waiting for the price to pump, getting out of this range, hopefully as soon as we see a verdict. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.